This year's top-performing stock was not one of the big technology firms driving much of the discussion about 2023's stock market recovery, but instead was Carvana, a used car hawker which flirted with bankruptcy, though shares of this year's gold medalist remain significantly below their pandemic peak. Carvana, which went public in 2017, enjoyed a massive surge in its valuation as demand for used cars soared, as its market capitalization jumped from $5 billion in February 2020 to $31 billion in August 2021. But a decline in demand and a massive shift in broader market conditions, notably a precipitous rise in interest rates that made consumer auto loans significantly more expensive, devastated Carvana. Shares of the firm plunged to as low as $3.55 in December 2022 as investor confidence was shaken by a string of controversies, including layoffs and insider stock sales as well as, perhaps most importantly, a mountain of debt. Carvana had been cash flow negative for every quarter it existed as a public company through 2022, generating about $8 billion of free cash flow through that period. Concerns about Carvana's ability to avoid defaulting on its debt crested last December, when Bloomberg reported the firm's creditors had agreed to take on a united front in their dealings with Carvana. Remarkably, Carvana has seemingly emerged from that crisis, announcing in July it had reached a deal to cut its debt by $1.2 billion and posting its first-ever profit during 2023's third quarter, going in the black despite an 18% annual decline in revenue as operating expenses dwindled. Though Carvana may have staved off a worst-case scenario in bankruptcy, Wall Street remains far from convinced that shares of the auto reseller will gain further. Carvana is among the most shorted stocks, with about 35% of its outstanding shares tied up in short trades which bet the share price will go down. Despite apparently righting its mid-pandemic wrongs, Carvana has an uncertain timeline back to growth, Deutsche Bank analyst Emmanuel Rosner wrote in a note to clients last month. This year's other top stock performers include a host of other companies whose share prices more than doubled from their 2022 troughs but failed to reclaim their pandemic peaks. The list includes crypto firms Coinbase, up about 400% this year, Digital and Microstrategy, about 300%, as well as financial technology platform Affirm Holdings, over 400%, and sports gambling operator DraftKings, more than 200%. Chip maker and AI maven Nvidia was by far the biggest winner among companies with market caps above $100 billion, gaining more than 230%.